I can't, Vicky, can you hear me? I can't hear you. Let's
I
go
only
ahead
fell
and-
asleep once.
Well, that's because you're a mom with young kids and you would have fallen asleep reading anything, right?
That's right.
Oh, goodness. Well, before we get started today, one of the things I wanted to ask you guys about was next week is the kickoff to Bold. And Bold is going to be running on Wednesdays from 9 until noon. And so I wanted to see what your guys' thoughts were about us maybe moving our time back from 11 to 12 to 12 to 1 and staying on the same day rather than trying to move to a different day. Would that be a problem for you guys? And that way, if people are involved in Bold, they can still do this. Would that work for you? Or do you think your brains will be too frazzled from a 9 to noon with Bold?
I think either one works. I haven't decided yet if I'm doing Bold, so.
Okay. Okay. Anybody else got an opinion? Nate, you good with just moving it to 12 to 1? Okay. Tom says yes. Jody? Does that work for you?
Yep, that's fine with me.
Okay. Seriously, we've gotten used to the Wednesday, so it'd be kind of nice to stick to that day if we could. So you guys can bring your brown bag lunch or your pizza, and we can do our wealth building workshop and eat at the same time. There we go. All right. We got Benita in. Well, good deal. We'll go ahead and kick off. Everybody get a chance to read your tax-free wealth book? Yes. Yeah, we got it. I think one of my biggest ahas, and I read this before, but in reading it again, hey, there you go. He's got his audio, was that the tax code and tax strategies are really designed to help us use them to keep more of our money. I'm not sure I ever believed that. What about you guys? Was that what you thought tax code was for?
I didn't, and although I read and understand the thinking, I'm not necessarily sure that it is. I'm not 100% in on that, but I am 100% in on the government does want to grow the economy and make jobs.
Yeah.
I would say the tax code encourages risk taking. The safest thing to do, the easiest thing to do is to work for someone else and have them pay you, but it's also the way you keep the least amount of return. The tax code provides incentive for us to take the risk of investment, capital expenditure, self-employment. In our case, there's a lot of things that are encouraged by the tax code that do help the economy grow versus just working for someone else.
Yeah, absolutely. It's interesting. I sat in on a webinar, and I'm trying to pull up some of my notes right now. I sat in on a webinar last night. And frankly, I don't know how I got on this group's email list, but I got an invitation, and they were going over the new proposals for tax strategies as it relates to real estate. And one of the big conversations around it, and one of the reasons they were asking people to reach out to their congressman, was because some of the proposed changes to tax law, they felt like it's going to dramatically impact employment, companies being willing to do startups. And so I don't know if you guys are familiar with it, but I wanted to share with you the proposal that's on the table eliminates the 1031 tax exchange. So I did not know that had been in place since the 1920s, according to the firm that was running that last night. But so they're proposing to eliminate that. They're also looking at putting a 3.8% investor tax on all rental income, as well as a tax when you sell a property. So that would be over and above the taxes you're already paying on income. It is just like a 3.8% surtax. one of my other notes is the 1031 exchange currently right now is used about 40% of the time for multifamily exchanges, which makes sense. So that was just something they shared. Current capital gains rates are 20%. They are slated. The proposal is to move them to 39.6%. And so there was a lot of conversation about how, doubling the capital gains tax would de-incentivize investment and risk taking. So it's kind of interesting. Everything that this book talks about, these guys were talking about last night and sharing concerns about the economy and how these tax strategies would change it. There was also a lot of talk about current carried interest, which is apparently going to be taxed at ordinary income. I don't even understand what current carried interest is. If anybody, Nate, do you know what that is? You're shaking your head. Maybe I don't know what that is.
Yeah, it's basically a loophole that politicians talk about where hedge fund managers can get paid, and they basically get taxed at the capital gains rate and not the income rate. So they work for their own firm and they get taxed at like 15% instead of 40%, which they should but it's really a lot of, my opinion, not being 100% informed, but it's something that politicians love to talk about because people hate hedge fund managers, but in reality, it's not like, how many hedge fund managers do you actually know? None. It's not a big, it's not going to move the needle to, all of a sudden there's no deficit anymore because we tax those people more. But.
Okay. All right. Well, apparently a bill has been presented May 12th to include real estate in that tax. So I didn't even understand the tax, so I didn't even know what that meant. But apparently there's a bill this week that was introduced to include real estate. I guess that would be earnings, to be included in that carried interest. So I'm clueless about that. I got a whole list of things to ask my accountant about now. Of course, this is all just proposed. So,
yeah. And it's not something likely that this group would come across, more than likely, okay. Given that our investments are likely to be not stocked, or not as much stocks, and we're not running funds for other people.
Yeah. Okay. That following the 1031 exchange and understanding what's happening with that, and then knowing whether or not they implement the 3.8% tax on real estate, I think would be obviously a good thing for us to keep up with, both ourselves as we do investing and then as we represent investors. So I signed up for updates from this real estate financial firm. They do a lot of commercial stuff. So as I get more information, I've got some slides. If you guys are interested in any of the slides from that webinar last night, it was really kind of fascinating, the information. A lot of it was over my head. I've got to have somebody else explain it to me, but it really does. And one of the things I wrote down off page 5, it says the tax law is a tool that the government uses to shape the economy, promote social, agricultural, and energy policy. And if you follow the tax law carefully, you'll discover that the secrets to amassing huge amounts of cash flow and wealth are found within its pages. So it's back to what Tom and Nate just said. Have any of you guys ever actually read any of the tax circulars? No? My accountant encouraged me when we started a dairy farm. Some of you guys know we have goats. So farming is a good tax strategy. So we started a dairy farm, and there are like pages and pages within the IRS code related to farming. And so my accountant sent me like this section of IRS code related to farming. I don't think he anticipated I'd really read it, but it was absolutely fascinating, the things that are taken into consideration with farming. So I encourage you, if you have, and it's a searchable, if you go on the IRS codes, if there are certain things you're looking for, it's searchable and it'll take you right to those sections. And he's absolutely right. It really does tell you exactly how to do whatever you need to do to minimize your taxes. It's all laid out. It's just tedious reading. It's not something you want to sit around and do on a Friday night. So anyway, how many of you guys, tax strategy number 1 was including tax planning in your wealth strategy? What do you guys do right now to include tax strategies within your wealth strategy?
Well, since I currently have no wealth, I'm starting from the beginning, so this is very helpful.
Okay, all right. Well, there you go.
Having the corporation to run my business through, that's a good one. I gave the record keeping over to Pam. That helps as opposed to me doing it,
Yeah.
just in case that old audit comes into play. And then, one of the things, again, that came up in this book was create your team. So I think I shared last time, I've got that. I had my initial meeting last week, which, that was an experience. I've never gone down that route. And you're interviewed, the sales process you talk to, it's kind of like real estate. You talk to the guy. All right. So I talked to him. And then when I went into the office to have the initial consult, that's when the 12-year-old showed up, which, okay, the older guys watching the 12-year-old, she's not really 12, but, she looked like she was 12. But, that's the person that did the intake and, gathered all the information and, set up the follow-up email, scheduling the appointment, so it's kind of like the real estate thing. Hey, you do the inquiry through me, then I'm going to send the photographer in. I'm going to send, Pam's going to call you about getting this done. They're going to it's like, okay, I can live with that. So yeah, one of the big things they're looking at is I gave them my tax returns, which that was uncomfortable. But I gave them the tax returns and they're scouring over that to see how I might improve my tax burden.
There you go.
Yeah.
Well, so they were starting where he exactly says, number 1 place to start to build your wealth is to save taxes, right?
Yeah, right. That's exactly right.
So they started, did you guys catch, and it's in my notes further, but I didn't realize that you can go back 3 years and amend taxes if learning what we're learning now, if there were things that we could do differently, that you can actually go back 3 years and amend your taxes in order to, potentially get some money back. I didn't realize you could do that. Like once we get them filed and we're done and we hold our breath and we get it like out the door, I pretend not to know anything about it until the next year, let alone go back, 3 years and revisit it.
Right.
I've always struggled with paying, you think doing taxes is kind of like baking a cake, right? I mean, you put all the writing, you put all the ingredients in, you follow the recipe and you get it done. And you think that most people preparing taxes are doing that. And I'm now on my 3rd tax attorney tax person in the last 10 years. And the first one was just super expensive and mostly did big corporations and all that. Friend from my family who used to do my dad's business. So moved over to somebody else that was from a friend through real estate, smaller company and all that. And their prices were better for what they were charging me. But now I'm with somebody that is much more aggressive, maybe more aggressive than I am, that is much more cognizant and knows, kind of going along this way of how to utilize the tax code to your benefit as much as possible. I always talk with my financial planner and say, okay, let's make sure we get all the opportunities with the 529s, money and that for the kids to take the credit from the state and make sure you're putting as much into your HSA to all those things. But I think that's the biggest surprise is that, not all tax guys are the same. Not all of them are going to do it. Not all of them are willing to stick their neck out at all to at least even advise you. It's kind of like going to an inspection where the inspector will say what's wrong with the house, but will not advise you of whether it's a major problem or not.
Yeah.
I've seen tax people being the same way, and that was a surprise.
Yeah, I think you're right.
Yeah, Kim, and I'll piggyback on Mark there for a second. So I have found that aligning yourself with a quality CPA, who views what you do, as a business and finds those loopholes and finds those opportunities for you to limit your tax liability is crucial. And then the other part to that is, I have my financial planner, and then I also have my CPA. Well, those are really, they're part of my overall financial team. So syncing those two individuals together and making them a part of the conversation every year, where they're communicating with each other to determine, hey, what do we need to do to move some money around? Do we need to create or put some extra funds into a SEP IRA or whatever avenue we need to go in order to limit the liability on the tax side? Getting those two individuals communicating together has been a great thing once I've finally been able to align all those stars together.
Yeah. Well, that's important, doing those interviews like Tom's doing, to interview and talk to people and get testimonials. I think you're right. I think Mark and Mike, you both hit on it. Having somebody who understands small business owners, and our taxes are different than an employee's taxes, and so having somebody who really understands and takes advantage of the tax advantages in small businesses, which, as we've learned and will continue to learn, there are a lot out there, so we don't want to leave anything on the table. So
yeah, and the other thing I think is also, as business owners, we need to be on a daily and weekly basis staying on top of that stuff. Too many times, and I've been guilty of it in the past, where February rolls around and I start pulling together receipts and inputting everything into a spreadsheet at the last minute. Well, you're behind the 8 ball then at that point. So you need to really keep track of your expenditures, anything from a business related expense standpoint, and maybe even have that conversation halfway through the year with your CPA and your financial planner on, hey, this is where I'm at right now. Do I need to ramp things up? Do I need to dial things back? Do I need to redirect my strategy in any way, so that when we do get to tax time, we're not reacting, we're being more proactive?
Yeah, and that's a huge nugget. Mike, you're absolutely right, because you miss a lot of opportunities. If we all did an audit in June or July, halfway through the year, and then worked on our strategies for the rest of the year, there's been times when we've done that and times when we haven't, and boy, the opportunity to be proactive instead of reactive the last week of December, trying to get things done that need to be done to wrap up the year, can be a little nerve-wracking. So that was one of the things I was going to ask this group about. Has anybody got a good bookkeeper? We need a bookkeeper. We just don't keep up with stuff, and we end up with piles all over the place. So if anybody has a good bookkeeper, I would love a personal referral for someone for that. So what about tax strategy number 2, talking about investing where you travel? They kind of went through, especially being in real estate. Obviously, real estate's our gig. So, and how many of you have used investing where you travel as a tax strategy? Say, Christy has. Right. Do you travel anywhere other than Tennessee, Christy?
Well, I need to buy some more houses so I can.
Absolutely.
That's really my goal. I want a condo on the beach that I can rent out 6 months out of the year and use 6 months out of the year.
Okay, that's awesome.
So I have in the past, I don't currently, but I used to own a home in Southern Alabama where I was stationed with the Army. After I left active duty, that I converted that to a rental property. Now it's about 35 minutes from Destin Beach. So one strategy we used every year when we took a family trip down to Destin for a week, we would always make sure to stop into Enterprise, Alabama, and spend a day and quote unquote tour the property, sit down with the property manager and go through all that. Not the entire trip could be written off, but a significant portion was able to be written off simply because of that pop-in.
Yeah. Anybody else own property someplace where that Hawaii property? Anybody got that Hawaii property that we could meet at and have our tax strategy and wealth building book club? We need an educational write-off, people.
Well, I think Christy Smith is down there right now. She would probably do a nice seminar for us.
There you go. Yeah, absolutely. Well, it sounds like there may be some more opportunity to invest where we travel, right? So there's one strategy. We may be leaving something on the table. Let's see, what else came along? Electing, how you, tax strategy number 3 then was electing how you do a limited liability company. Does everybody have an LLC that you're running your business through? That, yep. That has become more common. When we first opened the office years ago, almost nobody had LLCs that they were running their business through. That was a big aha. I had just always done that and didn't realize how many people didn't know that there were some advantages to that. So that's a conversation that we have with new agents, is we recommend they talk to their accountant or their attorney and discuss putting in, starting an LLC to run their businesses through. Any tidbits, anything you want to share around any LLCs, lessons learned, or strategies, Nate?
Well, the key is being taxed as an S corp, but that's and anyone who you talk to knows that that's what you're going to do. But it's become even more important in the last couple of years because of the I'm not going to remember the terminology, but you get like a 25% just elimination of income on of income tax based on your however much goes through your corporation. So it's, I mean, I think last year it saved me like almost $10,000 in tax, just that one piece. So it's, if you're making over 50,000, it needs to be discussed. If you're making under, it may not pay off, but yeah, it's something that once you've been established, it's definitely worth doing.
Mm-hmm. And is that 25%, that would be a sub S's opportunity then, a 25% write-off, is that against gross income?
So I happen to have like the paperwork right here, but there's a form, I think it's something like form 8859.
Okay.
That you go through the worksheet, and let's say you have $100,000 in business income, you reduce it by something like 25%. So then you're only paying tax on that 75,000. And if you're like, you're getting it, if you're doing this, like if you're just using TurboTax, you're getting this. It's 100%. Everyone and every software is aware of this, but I think it was maybe Donald Trump's first or second year he got that pushed through, and that was a real windfall for self-employed people.
Okay, I got to make sure my accountant's doing that. I don't know that I've even heard about that. They are. All right, Nate. I'll rest easier. I'm gonna count on it. All right. Anything else related to your LLCs? I know my attorney recommended, and I think I shared this before, that like years ago, the vehicle that I would be showing houses in is owned by my LLC rather than me personally, so that if I were in a car accident and something happened, that was one step away from personal assets. So that was a recommendation years ago when I first got in real estate, and we've just continued to do that. Just kind of made sense to me. Anything else that you may be doing with your LLC, either for tax purposes or for reduction of liability? Tom, do you own your plane in an LLC? So if you take clients up for aerial events, or Mike up for aerial events, you're protected.
I wish I owned. I'm right now having I don't want to say heated discussion, but a discussion with my CPA, because one of the things Mike and I are going to do on Friday, weather permitting, is we're going to go up and do an aerial tour of Woodbury, which is a neighborhood that Mike's farming. And I want to write that rental off. And my CPA, who's my stepdad, who's done my taxes, he's like, don't know about that. So we're having this argument over whether or not I can do that or not. So I need to pull in some meat or some muscle with me to say, hey, that gets to be written off. Now, Pam, on the other hand, who runs my checkbook, and she also is paid by profit sharing a little bit on a quarterly basis. She's looking at it saying, yeah, I don't think that should come out of the business account too. So I've got two no's on my, so I'm fighting for it. But yeah, that's I'm going to try and figure out how to write some of that off. Although she did let me buy the GoPro camera from the checking account. So, you know, I got my foot in the door.
Well, if you're going to use those photos on the back of a postcard or a mailing or something, it would absolutely be a marketing, right?
Absolutely. I'm going to give you his phone number.
That seems like a no-brainer to me.
I think we should vote and then you just tell them what we voted and that should.
I absolutely think there's an opportunity there that you can write that off if you do it.
I do too.
Okay, now can you get Pam to agree to it? That's my real hurdle.
I can't help you there.
We
You
are,
may need to rethink your business plan if you're paying someone to maximize your income, which means maximize your taxes.
Yeah, that's
Yeah. Yeah.
What Tom's really getting at is he wants me to start flipping the bill for it. So
right.
that's where this conversation's really going.
You're just hoping you pick up on it.
That's right.
We did a flight last week, and when we got out, there was a helicopter sitting on the tarmac, and it was like candy to Mike. And you know, you just gravitate. You couldn't pull him. I'm like, Mike, we got it this way.
We got to go.
Couldn't stop them. They're a little bit more expensive to rent, so.
Okay. All right. We're gonna
Yeah,
stick to the plane.
the Army doesn't pay for that for me, so I have to do that on my own.
Oh, well, you just need, Tom, you need to tell your tax guy about rule number 4, which says everything you do either increases or lowers your taxes. Every expense has the potential to reduce your taxes. You just need to buy him a copy of this book and
Send it over.
you know, yeah, send it over to him. You know, it is kind of funny though, if you think about things that way, as an independent business owner, if you have the mindset or the strategy, everything that you're spending either increases or lowers your taxes, one or the other, it would make us a little more conscientious about how we categorize things or how we use our time, right? I just thought that was kind of interesting. Anything else as it relates to LLCs or ways in which you found to maximize your opportunities, either for travel or like Tom with the plane trip and taking photos? Any nuggets?
we have a running joke when I have dinner with friends that we all talk about selling their houses for that hour and then I write off my.
Well, that's tax strategy number 4, deduct your meals. They said the 3 criteria around that is you have to talk about business. And I don't know about you, but real estate, I swear to goodness, comes up every time in every conversation. If Mike and I go out to eat somehow, it comes up. I mean, you're constantly talking about real estate. So talking about the business, the expense. So the 3 criteria is expense has to be ordinary for your line of work, or custom or usual for your line of work, which obviously taking clients out to lunch, taking your team out to lunch, discussing, real estate with your advisory panel, whoever that may be. That's an easy alignment. And then the expense must be designed to make more money for your business. So obviously, if you're taking clients out, your hope is to increase, or your advocate group, or past referrals, or friends, or anything. So that opportunity to deduct meals would seem like a really low threshold to have to hit in order to be able to take advantage of that. Anybody?
I have a quick question. How many of you have an advisory board for your business?
I get lots of opinions. Does that count as an advisory board?
Well, I do too, but I have thought off and on over the years that it would be interesting to have an advisory board of not just accountants and attorneys and things like that you would use, but other small business owners who may be in a different field. I have good friends who own a dance studio. They also own a landscaping company, very different things, but they're also fairly business smart.
Right.
And I would be interested in getting their opinion on things in a more focused manner, I guess. And maybe somebody else, I'm sure there are several people that I could think about, but I wondered if anyone else did.
I haven't, but I like that idea a lot.
I kind of do too. I've been mulling it for the last year. You think a lot when you're sitting in a chair all day long. Okay. Yeah. So, but yeah, it's something I've been mulling and thinking about, and they're just now getting over COVID. So hopefully we'll be able to get back together and talk soon. But I just think it's kind of a nice idea, a
Mhm.
thought process.
Well, the last book, the Millionaire Real Estate Agent Investor, that one talked about putting your team together. And I think it falls along those lines. I mean, I wrote in the, I showed you all last time, the list of names that I'm trying to connect with that have either do a good business practice or are in mine. And I think that falls in that category. Absolutely.
Mhm. I do too. Well, and small business, even if you're in different kinds of businesses, there are going to be expenses that could be and tax strategies that could be shared no matter what your business is. So, and that advisory panel, yeah, I think it's a great idea. Tom?
I have a question. It's somewhat, the business meal is what spurred this question for me, but I'm Dave Ramsey-ized deeply. So I have no credit cards. I spend when we go out, I have two cards in my phone. I have the personal debit account and the business debit account. The debit account, though, does not give you any mileage or any bonuses or anything like that. And, I've been approached 2 or 3 times by other people who say, hey, we run all our business on this and we get so much back. Dave's theory on that is, hey, if you're using a credit card versus a debit card, you're going to spend, I think his number is like 25% more. You will end up spending like, hey, yeah, biggie size my Starbucks instead of, medium. So I'm just curious to see in this group, how many people either use a debit card or if they use a credit card to run their business on. And if so, what do they use? And we can kick that to the back of the conversation if you want, but it came up. I was thinking about it because of the meal thing.
Mm-hmm.
I'm a Dave girl too, so I use a debit card.
I run all my business through my Southwest card. With that, I have both a personal Southwest card and a regular business Southwest card, but they all go together on my Southwest account for points, of which for the last 3 years, any place I fly, I can have companion fly free because I earn enough points to do that with. It gets me a little bit over, and then also all the points I earn, I can put towards flights. We only went to Vegas last year, so this year I'm paying, it's covering for me and the 2 kids to fly to Salt Lake City and back round trip, and then Carrie is free as a companion. We're taking my mother-in-law to Vegas this year, and then we're going to go someplace later this year. None of the flights are costing me anything. Overall, when you add up the dollar value for that versus what, how much am I getting back? Because it's all points, right? So it's a point per dollar that we spend on that. With by earning the free companion fare, it's about a little over 2%. I also have a Fidelity card that's linked to my investment account that I could use that instead. We like to travel, so we use that, the Southwest card, but otherwise we earn 2% back on Fidelity. So it kind of goes back to that whole concept of taxes, right? I mean, you are maximizing, you're doing the same thing every day, but you're maximizing your return on investment by doing it. And so I go back to the debit card as a discipline thing. And if you've done it long enough, I would think you're probably as disciplined to thinking that way, that if you keep doing what you've been doing, but change it from a debit to something that's giving you something back, then but it's whatever you're comfortable with. But I run everything that way.
We do at the office as well. We've got a Chase account, and I put anything we possibly can on that credit card as a company. And that has always paid for, in the past, the entire team's family reunion, flights, hotel, the money that we get back on that, we turn around then and use. And I think it gets back to, are you going to pay it off every month? Yeah. As long as you pay it off every month, that you're making money. We put everything as a business we possibly can on a credit card, utilities, telephone bill, everything that I can put on. And we get several thousand back each year in points that we can use, like Mark said. So we pay it off every month, so we're not incurring any interest. And I mean, it really adds up. I mean, to be able to, from a, from an office point of view, to be able to send the entire team and not have it be an expense, to the company because we've used those points. I feel like that's just being a good steward of the company's money when I can figure out how to make it go further. So, but if you're not paying it off every month and you're paying 20% interest, then that's not obviously being a good steward. So.
Yeah, and absolutely. I mean, I have it set up so it's automatically deducted from the checking account. So in a way, it's connected to the checking account. It's just connected, where it gets paid once every 30 days. Not to mention, if you've got there's also a whole theory about, you're keeping that money in your account for an extra 30 days, which is allowing you to, that may be false accounting, but there is some there. I track everything through Mint. So I can see all my accounts, track my net worth and everything else, but then you can see those accounts right next to each other of what, when is it going to hit and all of that. So.
What about you, Christy?
I'm behind the 8 ball in all of this. I do not have a business credit card, but I'm currently applying for one.
Okay.
So I just keep track of them that I use with my personal credit card, but I need to be better at that.
Got it. All right. Well, I think I'm going to explore that a little bit because we spend some bucks every month.
Yeah. You might as well get some money back on that.
Yeah.
Mike even went so far. I have a business card that's above the line, and he put a little tape on it that says above and below the line. So I have 2 business cards, and the above the line. That's how we do it at the office. For those of you that don't know, anything mandatory to be spent at the office is an above line expense. Anything the ownership group would want to spend money on, if the ownership group wanted to buy a boat or do something crazy, anything that is not absolutely necessary for the company has to be a below the line expense. And so we decided to run our own company that way because, our sales practice, there are some things that we run that are absolutely you have to have. There are other things that he thinks I don't have to have, which I disagree with, but I use for my avid book buying collection, because I have a tendency to read a lot. Mike doesn't think those are absolutely necessary and would like for me to run those on the below the line card. So I appease him with that. But so we actually keep track that way. So that we have 2 of them, and we keep track of the absolute fundamentals, which would tell us truly on a P&L what has to be spent on behalf of the business. And then the other things are still booked as a business expense, but they're booked below the line.
Well, I can tell you, I believe the books are an above the line.
I'll let him know that my wealth panel advisory board just voted that the books are above the line.
We need another vote.
So Kim, I would like a question on that. So based on that theory, I get that the books are discretionary spending, right? So that's why it's a below the line. So I use Brivity in my business. If push came to shove, I could use Command and wipe out that expense of using Brivity. So is that an above the line or below the line expense?
It would be above. We have Brivity too. It's above the line.
Okay.
So, yeah.
That's what I would think. I just want to make sure I fully understood your definition on how that would be.
Well, and that's really more important, truly, I think, if you're profit sharing back with your team,
Gotcha.
for some people that do the profit sharing back with your team, some teams run an awful lot of discretionary things through their company businesses. And if you're trying to profit share, that really hits that bottom line. So
as a company of one, I might do a little bit of discretionary spending.
yeah, there you go. Yeah. Well, that's because every expense either raises or lowers your taxes, right?
Exactly.
Exactly. Well, and you guys have seen on page 31, it went over cash flow quadrant, and I love the cash flow quadrant. I just think that I like the simplicity of it and understanding that you're going to pay the most taxes in that E and S side of the equation. And it gets back to Nate's comment early on. It's easy. It's just to be an employee of a company, but you're going to pay the most taxes in that category versus switching over to the other side of that quadrant and being an investor and a business owner. And so we could do a whole study just around cash flow quadrant. I think that would probably be another worthwhile book. But any other thoughts around taxes as it relates to the cash flow quadrant, or any other insight you guys want to share on that? Oh, yes, I've heard of that. Okay, Nate,
Yeah.
I've heard of that now. I didn't know what you were talking about.
That's because I'm not fluent in this. I just know what it is, but to answer your question, I think that goes back to the whole premise of this book. Because I can tell you all exactly how to pay no taxes, and it's not hard. Just don't make any money. You will not pay taxes. In fact, they might actually give you some money based on
Yeah.
how things are set up. But the entire purpose of all of this is not to pay no taxes, but to maximize your income and wealth,
Mm-hmm.
not have taxes be getting in the way of um, growing income and wealth. Because I mean, I will happily pay whatever the taxes are on $1 million versus paying no tax and making 100,000, right? But and then as it relates to this book specifically, once you understand the concept that the cash flow quadrant, taxes reward those who make income passively and through investment. The current system, as it is set up now, rewards the passive and the income from investment more than the income from from wages or
Right. Ordinary income.
Now,
Mhm.
who knows what may happen in the future? We might
Right.
switch, but for now, if you can move more of your income into the passive and the investing than from wages, then you're going to come out ahead. That's just how it is right now.
Mm-hmm.
On the kind of along that line, or ways of beating taxes, discussion I've had with my mother recently was, we sold her house. My dad passed away a few years ago. We just sold her house this year. She's downsized. The house is paid for free and clear. She's going to, she's looking at her tax liability overall potentially, and which has sparked a whole different discussion. But the fact is that with the latest, I think it was the last tax redo, the amount of gift tax that you can give in the course of your life, or the amount of gift money you can get without being taxed on it, has gone from 5 million to 11 million, and that's where you as the giver have to pay tax on the money that you're giving to whomever. You can give 15,000 to whoever you want every year without any penalty, but the total maximum you can give out of it at one is gone to from 5 million to 11 million. So there's a lot of people talking about right now. And the reason I bring this up is we all have parents that may be looking at this. Do you wait and do it as an inheritance, or do you, and if your parents live to be 85 and you're now 65 and you don't get to enjoy that, is it better or should parents be considering, if they have plenty of money? Now, I realize that that's not everyone, but if they've saved up, there's a lot of baby boomers out there who have saved up a whole lot of money over the years. Their 401ks, the market's gone crazy over the last couple of years. That is it better to consider giving money now while people can use it, and whether it's for kids' colleges or whatnot, versus waiting till they pass? Plus the fact that the tax incentive is better now with what's going to happen in the future with the potential changes under the new Biden administration and what the Democrats are looking to do with that. Is that something to be taken advantage of now? It's just something I'd never thought about before, but it's definitely out there.
Yeah, so definitely something to talk to your financial planner about.
Yeah,
for sure. Yeah. Well, that gets back to you talking about, family and taxes and strategies. Tax strategy number 5 was putting your family to work for you. And that was one of the things our accountant advised us to do back when the kids were young. They used to help us with mailings, putting labels and stamps on. They still joke about the fact that back in the day, when I probably couldn't do this now, but we used to stuff mailboxes. That was illegal. I got turned in for that, but or the kids would go along and, you know, stick postcards in mailboxes. I drop them off at one end of the street with their rollerblades, pick them up someplace else. And then I took them to Dairy Queen afterwards. And they still to this day say they had child labor for dilly bars. But they were happy to do it at the time. And I got their friends involved, and all it cost me was a dilly bar. But, you know, I've heard some agents say that they actually employ their kids and they take pictures of the kids in their marketing and advertising. And they pay the kids a salary then in order, because they're on their marketing. Mike, take note of that. You got plenty of them you could throw on postcards. You know, and our accountant told us there was a threshold of about $6,000 that as long as you stay under this certain amount, you know, the taxes that they're paying is at the lowest or no tax rate versus, you know, the tax rate we were paying on things. And we really had the kids doing stuff. I mean, from the time they were young, they were involved in lots of ways. But I'll tell you what, over the years, for those of you that have young kids, I mean, the kids worked, we put it back, they had a savings account, and that was a bit of a nest egg when it was time for them to go to college. You know, so depending on how many kids you have and that opportunity, that's a big one to pass up if you're not taking advantage of that. Anybody else using that, have used that?
Yeah, so not yet with my kids, although I look forward to the day when they're a little bit older and they're doing all the manual labor for me. But my wife, Maggie, I mean, on paper, for tax purposes, she's my administrative assistant. So
Yeah.
we pay her a salary every year, quote unquote, pay her a salary every year. But what that does, that lowers my taxable income, and we keep her at just the lowest possible income level, where she's being taxed at the absolute lowest amounts off of those earnings. So it's really beneficial to us to be able to do that. You know, it saves us in the long run. So
Okay.
Another one with kids, if you went around probably back then, but now let's just take your $6,000 as example. Instead of paying them $6,000, I think you can turn around and put that into a Roth 401 for them. And so they've got a Roth building when they're 8, 9, 10 years old for
That's
retirement purposes later down the line, letting it grow at the stock market rate.
Wow, that's a great idea.
Yes, you can give them, you can contribute to them for their Roths, but you'd have to give them a W-2 for at least that amount. So if you pay them $5,000, whether or not you actually give them that money is up to you. But if you give them that W-2 and then you can contribute that amount in a Roth for them.
Okay.
Nate,
This is not tax advice. Are we supposed to say that?
I was gonna say, Nate, and Nate,
Disclaimer.
Everything that I've said is not tax advice.
and also what you're saying, Nate, when you say whether you really give it to them or not, you mean you really put it in their account. You're not suggesting to say
you
that
actually,
you paid somebody on a W-2 and didn't actually give any money out of your business.
But you're not going to give a 8-year-old $6,000 and be like, hey,
Oh my,
you know.
my
Hey, drop
17-year-old thinks I should.
Drop them off with rollerblades and have them walk a neighborhood for you.
But they have to get, like, you can't pay them $500 a year but contribute $6,000. It has to be, you can't contribute more than you make to a Roth.
Right.
Yeah. What a great way to be building their future. And it's just smart. Obviously, your tax amount's going to be, your taxable rate's going to be way higher than their taxable rate. So it's a deduction for you. And if you think about it, if you do that every year, you know, starting at what, 8, 9, or 10, and you do that each year till they graduate, what an opportunity towards college.
Well, my grandparents paid us minimum wage way back in, the 70s and 80s, which was still pretty good. When we were kids, we worked in tobacco. I drove the tractor while they put in hay, all kinds of fun stuff, but I made money.
Right. Yeah. Well, and not only is that, when you think we're talking about taxes and business strategies, but there's a lot of value in teaching a kid work ethic and giving them an opportunity to work and see reward for that. Sometimes I think we forget, the opportunity there to help kids see that advantage too. That's a valuable lesson, I think, that is getting lost on a lot a lot of kids. And I think that's a shame, because there's a lot of reward in working and having something to show for it, you know? So, well, our last task strategy was document, document, document. What do you guys, I know there's all kinds of apps and all kinds of things out there that people use in order to, you know, capture information. So I thought that'd be a fun thing for us to talk about, is what do you guys use right now in terms of documenting and capturing expenses? Tom?
So, all right, so this is a love-hate statement for you, okay?
Okay.
We have not converted to DocuSign. We still use Dotloop. But in Dotloop, we have a file called Bubba's Tax Receipts. And so you can, because you can categorize, you just take folders. So
Okay.
Pam has taken the folders of prospecting, all of the Gary Keller folders and tax. She worked with the accountant to set these folders up. And then I have on my phone CamScan. So when I go to the gas station, you know, it just takes a minute. We'll be on it, a minute. And I scan that receipt. Once I get back in the car, I just put it on my leg. I scan it, and then I upload W receipts, and it just goes in there. And now at the end of the year, we download the entire file onto a backup, and now I've got everything electronically.
That never would have occurred to me, to use Dotloop.
I'm out.
That's cool.
Yeah.
Okay. Well, and it's well organized.
Yeah.
So this doesn't track the receipts per se, but it does track the expenditures. I use a free software program called Wave. It's roughly QuickBooks, but all your transactions download into the software. You categorize them. It takes probably 5 minutes a month, and yeah, I set up the categories to match the tax categories initially. So that makes it really fast and easy to track all of my expenses for the real estate business.
So Nate, does that, you say it coordinates with QuickBooks. When you enter it through that app, does it automatically update? Can you download that into QuickBooks?
Well, it's roughly the equivalent of QuickBooks, but you don't pay for it. So it replaces QuickBooks.
Got it. Okay.
QuickBooks is a couple $100 a year. This is free.
Got it. Okay.
It does essentially the same thing.
Okay. All right. Anybody else have any apps or useful tools that they use to keep track of things?
Yeah, so a little elementary, but as far as keeping track of miles that I drive, I use Mile IQ. Fantastic app. It's super user friendly. Swipe left for personal drive, swipe right if it's a business drive. It logs everything. At the end of the year, I can log in and literally just download the statement of miles for the entire year, and I hand that copy over to my accountant, and there's my write-off. So unfortunately, I see a lot of agents that don't keep track of miles as closely as they should, but I think by last count, I think miles are 56 cents per mile is what you get, or 54 cents per mile. So if you're driving 20,000 miles a year, give or take, I mean, that's over $10,000 write-off. So I think for most agents, that's probably their biggest write-off opportunity at the end of the year, especially for newer agents or those who aren't doing, a lot of, volume or big numbers every year. So just from a user-friendly standpoint, that's definitely been one that helps me every year come tax time.
Okay.
So
That's
Mike,
great.
I use that. I've used mileage or IQ in the past, and I hate when you find out that, it didn't work for these 10 days if you went back at the end of the month. I mean, I'm not the best at tracking it every day, but what I have found is if you never turned off your Google tracking and you go to your timeline in Google Maps, it'll show every drive you did. And because I'm lazy and I don't track the stuff at the right time. I do find myself at the end of the year, because in February I start trying to pull my paperwork together. I can sit there and I can review the entire year, every day of every trip I ever took, on what day, where, when, and then I can recalculate business miles because it shows you exactly where you went. So you can say, oh, that was to the store, oh, that was to the office, or oh, that was to wherever, and you can actually track it. And you can actually relive your entire year of how wonderful it was.
That's right.
How many hours does that take, Mark? That sounds
I didn't
excruciating.
say it was effectively good use of time, and it may be costing me more money than the write-off. That's not the point.
Yeah, I did that one year, and after spending an entire 8-hour day
It's
figuring
about how
out
long
where I
it
went, I was like, nope, not like you.
Yeah.
Yeah, in the $50 a year that you pay for Mile IQ, that's also a business expense. So you write that $50 off also. So
Yeah.
to me, it's a no-brainer to
And-
use something like that.
And Tom, if you have that business credit card, you automatically just make sure that $50 gets charged to that, so you don't have to forget to pay it or anything like that. So,
I hear what you're saying.
This is a group that's just here to help each other, Tom.
So true story. Last week, Tom and I flew down to Columbus, Indiana, and Mile IQ tracked that as a drive. So there's 100-something miles that got logged in Mile IQ as a business drive and down there. and back.
Well, theoretically.
Right?
Yeah, but remember, nobody's letting him write that off, so I don't think you can either.
Right.
Yeah, I think the IRS is going to question the 125-mile-an-hour ground speed that we
Right.
flew there and back.
You may not get by with that one. That's awesome. Oh, goodness. Well, all right then. Those are good. Wave and Mile IQ. So those are both good resources. So anything else before we wrap up? We're 11:59. Anybody got any questions, ahas, anything to share before we talk about next week's reading? Or next time, week after
How
next?
about, I love this group.
The words sexy and brilliant.
Yeah.
I love this
yeah.
group. You guys
Yeah.
are terrific.
It's a good group to learn and share with, isn't it? Yeah, absolutely. We don't have near as many people interested in talking about taxes as we did MREI. Did you notice that? We lost like a half of our people because they're not wanting to talk about taxes.
hey, I'll pay taxes all day long if I put money in my pocket.
That's exactly right. Yeah, that's our goal. So, well, for next time, we're going to cover chapter 8, which starts on page 63 and go to page 150. And that will be the start of part 2, which is chapter 15. So you're going to read 8 through 14 for week after next. And I'll send out a reminder, but we'll do 12 to 1 instead of 11 to 12. And that way, anybody who's in bold can still participate. Is that good? Yeah.
Good.
Awesome. All
Thank
right.
you.
Well,
Bye.
absolutely. You guys have a good day.
Thank you.
All right.
Bye, guys.
See ya. Bye-bye.